Okay, recording this video on Wednesday the 7th of September 2016. It is 7:29 a.m. Chicago time and recording this video in a hotel room in Florence. We're back traveling again. First stop on our world tour is Italy. Going to be in Florence for a few days. Never been here before. Beautiful city. I think it's one of those cities you probably have to go see, just like Venice. Fantastic architecture and history and art and good shopping and great food. So we're really enjoying our time here. And then the next stop is Sicily after this. Anyway, yesterday sorted out a decent internet connection here. So I wasn't trading yesterday, going to be trading today, but yesterday was an incredibly important day. And 2 or 3 times a year we get one of these days. The last one was on the 3rd of February. Put out this video, oh my god, global macro charts. Everything changed on that day. If you recall, Bank of Japan announced their negative interest rate policy. That was on the Friday. Took people a couple of days to figure out, the strategists kind of figure out what to do, and they made their move on the Wednesday. And we had all these kind of trends kind of set off on the Wednesday. And we've kind of had continuation of those all year, particularly Japanese yen, the gold and silver trends, moves, and so on. And yesterday we had kind of confirmation that we're going to get continued weakness in the US dollar. And I've been bearish on the US dollar, certainly against the Japanese yen all year. And this was the video put out on the 10th of April saying sayonara US dollar. And the yen has done nothing but just go up and up since December of 2015 when that kind of rally started. But yesterday's activity, let me show you this on the charts. This is my usual kind of currency setup charts, looking at kind of the majors, looking at the dollar index and the Japanese yen. Keep these two together because they're both carry trade funding currencies. Euro and British pound because they're the European currencies, very important trading partners. Aussie dollar and Canadian dollar, these are the commodity currencies, and that's why I keep them as a pair. You can see yesterday we had big blue professional spiky bars on all of those currencies. So Aussie dollar on the way up, Canadian dollar on the way up. We had British pound here, bang. You can hardly see that one just because that Brexit down move was so big, but there, bang, that's jumping the creek. Here's the euro kind of settling on support and then taking off from there. And Japanese yen support holding, bang, going off, and we got kind of a reverse happening in the dollar index. We've been waiting and waiting a couple of months. It was the end of June that we had Brexit, and this blue professional bar kind of came in, and we've had that huge trading range that we've been stuck in for all the currencies ever since, and now we're finally getting resolution. We're not kind of totally out of the woods, we're not kind of broken up or above or below those kind of trending range bars with confirmation yet. But we're kind of getting there, and these blue professional bars tend to, we start moves with them and we end moves with them, and so when the professionals want to get a trade going, a trend moving in a particular direction, that's when you get these big ranging days. They set the trend off in a particular direction and then kind of eventually kind of take profits. So that's what we got kind of going on the currencies. Dollar index is a really handy kind of futures contract to look at because we got all the volume available for it. And it's kind of there on your screens. But the other thing I like to do is kind of include some other currencies. Remember, this is a weighted basket of currencies. I think the euro is the largest component, and then it's the Japanese yen, and then maybe the British pound, something like that, but it's heavily weighted towards the majors, and so the minors don't have much of an impact. Another way I like to look at this is to put all of those kind of major currencies on one chart. Let me just pull up a data window here so you can see what I've got on this chart. So let me just give you this last numbers. Yeah, there we go. This is a monthly chart going back. I mean, it goes back to 2000, 2001, but the data on this view is from 2007 to 2016. We've got the euro, the Aussie, the pound. We've got the Kiwi, the New Zealand dollar, the loonie, which is the Canadian dollar, then the yen, the Swiss, Mexican peso, and the South African rand. So we've got a few more currencies kind of loaded on there. And what I do is I calculate a straight moving average of all of those currencies. And what I'm looking at is the 12-month change, so the change in each of those currencies versus a year ago, then average them out, and the average of those is this white solid line here. So if we got the line going up, that means all of these currencies against the US dollar are strengthening, and therefore the US dollar is weakening. So since the middle of 2015 we have had the US dollar kind of weakening, and all of these other currencies, the combination of kind of emerging markets and developed market kind of currencies strengthening against the US dollar, and the US dollar has been weakening against those there. Last time this happened was back in 2009. Go check your charts. You can see kind of the big move in the dollar index from there. So what I think is going to happen is we're going to get the next leg of this dollar index kind of weakness kind of going on. Let me just remind you of the multiple time frame system. This is the usual view, the kind of more traditional view with better pro-am and momentum on one side, and then the system view here. So this is dollar index, where we had the uptrend, bang, ended in 2015 with an exhaustion pattern, pullback to end of trends on the lowest time frames. That's these little gray dots here. Then we have to go make pullback to end of trend in the intermediate time frame, bang bang. There's the slightly larger lines and this larger dot, and then finally the highest time frame, pullback to end of trend with a large dot here, bang. So end of trend rippling through the time frames. It takes a long time for a market to top out, but eventually once you got that, then we're going to go into a consolidation phase until we break into the next kind of trending move. I thought that this exhaustion pattern was so long ago. A few months ago I thought, well, maybe we need to go do that again and break through 100 and get exhaustion going on, but we've not done anything like that over the last 6 months. All we've done is kind of tested those highs, and now with last couple of days activity, we have a low risk entry point going on here. We've been bouncing off resistance here. We had weakness, bounce off resistance, and we've kind of on the way down. If we break a support here, that'll be confirmation that we're breaking 2 time frames into a downtrend, and then anything kind of below 94, below 93, bang, that we're really on our way down here in the dollar index. So that's the important one to look out there. The trend, Japanese yen, you can see here, that's where we bottomed in the yen in December in 2015. Nothing but strength, red bars all the way up, bang, 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 bang. That's why I had the sayonara USD, because the Japanese yen is going to strengthen against the USD, and we've had that. And it's a result of the announcement. Well, prior to the announcement, I think the announcement would have been around here with this kind of big activity that we had, and yeah, the trend's kind of continued in Japanese yen. Euro is still weak at the moment, but we're waiting for this next kind of setup because we've had a little bit of U-turn go on here. There's the Brexit. The euro also weakened on that day, not as much as the pound, but the euro did weaken because everybody's thinking, well, if the pounds, if the Brits are out of the eurozone, who's next? And so we're having a little bit of a U-turn happening here. They sell it down, the professionals sell it down and use that kind of large range, large volume to kind of take position, and then they get the move going. They break it up, bang, with a big blue professional bar. Anything through 13.8, this kind of resistance up here will get us kind of into an uptrend here. It's not signaled yet on the trending system. We're still showing weakness here, but we've got a nice support gone in on the highest time frame. We're just waiting for that break on the upside. British pound, still weak on the British pound. We've still got to make our pullback to end of trends on a bunch of time frames, the intermediate time frames at least. But this is the counterintuitive play. And if you'll go back to the video recorded on the Brexit day, I said, wait for that on the pound, because everybody's so bearish with this kind of Brexit news. The contrarian play is to use all of that weakness to kind of get into positions and kind of go the other way. And what we're doing at the moment, we're about to have a short covering rally kind of go on here. All of that exhaustion selling going on here, all these huge readings, 350,000 kind of plus on better momentum. Professionals buying it up at those lows. As soon as we start to kind of get back up to anywhere close to 140, we'll be triggering all of those stops, and all of a sudden look for that momentum line to just go exponential. We'll be hitting some exhaustion buys, and that'll be a short covering rally. Too early, call a change in trend in pound, because we've got to see that short covering rally first, and we'll settle back after that and then start the uptrend proper. But that's what's kind of going on in the pound. Aussie dollar, nice, we've been breaking into this uptrend since the beginning of the year. You can see all these red bars kind of going on. We've been settling under pullback to end of trend on the highest time frame, but time's run out for that, and we're starting to break up back up into the pound and the Canadian dollar. Same thing, we had an exhaustion sell, a V reversal kind of down here, bang bang. Look at all these blue professional bars buying into that low as it's coming down and then getting the move going, bang. And this is jumping the creek, blue professional bar through resistance, kind of getting this move going, and we're in an uptrend here and looking to break. So so on this time frame, you can see low risk entry point. We're about to break a second time frame, get us confirmation this trending move on the way up. So another kind of entry into the Canadian dollar there. So there we go. That's what's kind of going on in currencies. Going to see weakness in the USD and strength in almost everything else. And as a result of that weakness in the USD, gold and silver going to continue higher. Crude and copper are going to kind of start their moves up, I would expect. If the money's flowing out of the US into the emerging markets or the other markets, what's going to happen to equities versus bonds? Is the money flowing out of equities or out of bonds or both? At the moment, they're still showing uptrends on both of those markets, but my gut feel is the bonds are actually the weakest of the lot. So let's see if we get a change in trend in equities or bonds kind of over the next few weeks, as that trend in the US dollar kind of keeps going. Anyway, so there we go. Tuesday was a really important day. Wanted to put out a video on that. It's 7:40 a.m. Chicago time now. Just going to wait for the open in the markets in in an hour's time and see what happens if we get a continuation of the uptrend from yesterday. Anyway, hope your trading is going well.